Okay, welcome guys. We're going to start with the scalper section, scalper strategy when we are impatient and we can't wait for trades. And then instead of jumping into junk trades, we're going to look at some quality, some good setups. So, but before we start looking at any charts and all that, like every day you're supposed to do this, like trade only when you feel like it. Mark is going to talk more about trading psychology and that at the end of this whole thing. So how this is going to work is today I'm going to talk for maybe 45 minutes, and we'll see how far we get. I don't want to rush the whole thing. I want you to know exactly what's going on. And if we can do this again at another day to continue, then that's what we're going to do, another 45 minutes or so. And then on the third day, we're going to be looking at the charts together and trying to find some trades live. So we're going to have that session, preferably when the market is full of volatility. And for those of you who knows the basis of the strategy, there are a few sections here that I want you to take note of. This is going to increase your win ratio. These things that I'm going to tell you now to take note of. But those of you who don't know the strategy at all, you just sit back and ask questions and take notes as we go along, and then things will come together for you. Okay, so what we have here are the various types of traders. The first type of trader that we are always faced with, is a reactive trader. This guy, he comes into the market. He just sees a level and then he will pull the trigger. He's not looking for any confirmation. What we mean by confirmation is a lot of people looks for certain pullbacks and things like this. When prices hits here, he's first looking for a move up maybe, or whatever he's looking for at the level. That is not your reactive trader. The reactive trader, his eyes are on this level for minutes or hours or days, or wherever he's drawn this trend line, wherever he's drawn this level or this zone. He just acts as soon as prices gets down there, and he pulls the trigger. Now this guy is a reactive trader. Now what we want to do, this is the reactive trader coming in here. He sees the prices coming down and then he reacts immediately based on the level that we are on. Then you get the responsive trader, and that is what the scalping strategy is a lot about. We are going to be responsive traders using this scalper strategy. And that only when you use the scalper strategy will we be responsive traders. We're not responsive traders when we're using any other strategy, just this one. But what I mean here is we're going to respond to the action that our reactive traders has taken here. We're going to respond to that. So we need to see some more action here. We need to see specific price action before we become responsive and before we pull the trigger to buy or to sell. So we are at the level, we also looking at the same level as the reactive guy. But the way we respond is different. He responds without any confirmation, and we respond with confirmation. And the confirmation comes again in here with price action. This stuff can't be hidden away from us. We know people were selling. We know people are buying. We know they are selling. We know they are buying. There's no hidden thing here. This is always going to be traced and tracked on your charts. So we will be able to see what it is we need to react or respond to. Now, I want this scalper system to be as simple as possible. Again, Mark is going to talk a lot about psychology on the last section of this. But what I want you to understand, it has to be as simple as 1, 2, 3. It needs to be as simple as 1, 2, 3. Or as an ABC. I like to call this thing a break and a pullback. So we're going to focus now on the what. Yeah, so I'm trying to make it as simple as possible. There's like 5 different things that we need to know here. It's the what, the where, the when, the how, and also the who. Yeah. So those things are, and once you know those 5, then I feel you have the strategy under your belt. So we'll start off with the what. Yeah. So as responsive traders, this is what we are looking for. And it's as simple as a break and a pullback, a 1, 2, 3, or an ABC. Now, I'm going to try and prove to you that this is all that it is. There is nothing else to this other than a break, pullback, a 1, 2, 3, and an ABC. Because if you are a pattern trader, you are looking for a head and shoulder pattern. Or if you are a Fibonacci trader, you're looking for a specific Fibonacci pullback. Then this is exactly the same thing. A Fibonacci guy is going to look for the break and the pullback. He wants 50% and he's going to buy. 60%, 38.2%, or whatever the percent he's looking for, the pattern remains the same. He's looking for a break and a pullback. If he's going long here, and on this side, he's looking for a breakdown and a pullback. This is a responsive trader. So all responsive traders are looking for breaks and pullbacks. No matter what. If you look at this here, the left shoulder on the head and shoulders, prices comes down in a nice trend. This is like a correction for Elliot Wave, a ABC correction. People who don't know about Elliot Wave, this is just a trend coming down. But the main issue here is the 1, 2, 3. It's just stuck in the middle there. And then there you have your left shoulder, your head, and your right shoulder. So the head and shoulder guy is looking for a 1, 2, 3, an ABC, a break and a pullback. If you look at it here, the left shoulder trend is going up, forms the head, comes down, creates the right shoulder, and then they are entering. So the Fibonacci guy, the Elliot Wave guy, everybody's looking for the same thing if they are responsive traders. Obviously, if they are reactive traders, all they're doing is looking for a level, and then they're going to go for it. They're looking at this level here, perhaps, drawing the line there, and as soon as prices hits there, they are selling, irrespective of anything else. But the responsive trader is going to respond with prices coming down and going up, or prices going up and coming down. So a responsive trader is going to look for 1, 2, 3s all over the show. I want you to pay close attention to this. This is a Quasimodo pattern. It's named various things. Some people mistake this thing for a head and shoulders as well, because you have your left shoulder there, your head, and your right shoulder there. But there is a difference between a Quasimodo and the head and shoulders. But the common thing that they do have is that it's still just a break and a pullback. Let me quickly just show you the difference between a head and shoulders and a Quasimodo. Quasimodo has your left shoulder, head, right shoulder. In here we have the head and shoulders the same. It's got your left shoulder, head, and right shoulder there. But the difference here is your leg 1 to 2 doesn't need to break the left, the trend coming down. It doesn't need to break this. However, with the Quasimodo, you need that to happen and then the pullback. So I hold more weight with this one. If there's something like risk management and trade management, then and you're dividing your qualities into like 3 sections. Let's say your best trade is 0.3%. That's your best looking trade and everything is perfect. And then you have your second best trade is 0.2. And you have a bad looking trade that's 0.1. If that's the case, then this would be my 0.3% trade here, where it forms a Quasimodo with a break and a pullback. So it breaks this high here. So there's a trend coming down, at least like a 3-legged trend coming down here, at least. And then this 0.1 to 2 breaking that level, and then you get your pullback, and then your entry. So that would be my 0.3% sort of a trade. The normal head and shoulders, it's still a 1, 2, 3, but because of the way we weight our quality of that 1, 2, 3, we will probably use this as a 0.2% trade. If you're trading your small accounts, $1,000 and all that sort of accounts, then obviously this is going to be more like a 1% trade here. This is going to be a 0.5% trade. But I'm just saying, whatever your quality is, you are placing more of your weight on the Quasimodo sort of a shape. But I'm digressing here. The thing that I'm trying to get to you is that the 1 to 3 is what you're always looking for. The break, the pullback is always what we are looking for. It all depends on where you're finding this. Just to solidify the idea that that's really all that it is, a break and a pullback. This guy here, Elliot, he's the designer of the Elliot Wave. Complicated stuff, good trader and all that, but a complicated system. He too just looks for breaks and pullbacks, no matter what. He looks for the wave number 1, and then if he's going to trade the second wave, he's looking for a pullback here of 50%. So he too is looking for a break and a pullback. And if he's trading wave 4, he's looking for the same thing. He's looking for the break up and a pullback down, and he's going to trade wave 5. Fibonacci trade is the same. So their confirmation would be to enter when it hits a certain retracement. As prices are going up, hits a certain level of retracement, and then he pulls the trigger. So, but everyone is just looking for a break and a pullback first. Just to go a little bit deeper into Elliot Wave, we don't want to spend too much time here. As I said, it's a complicated system. Yeah. He only has 2 real things that's going on here. A motive wave and a corrective wave. A motive wave means that you're starting from one point and you have this goal to get to the other side. And in between these points, you have a whole lot of motive waves and corrective waves. Correction means if you're starting off at the bottom and your goal is on the top, then that is your reason. That's your trend. That's your motive. But you're always going to have a correction coming down. And that is your corrective wave. So it becomes more complicated when he uses impulse waves, leading diagonals, ending diagonals, anything to get you from A to B. An impulse wave has 5 legs to it. Leading diagonal also has 5, ending diagonal also has 5, but it becomes much more complicated. All you need to know is motive means that you're getting from A to B. There's a movement there. There's a journey that needs to go. It's a trend going. And the correction is people taking some profits as they're going. Complicated corrective waves here. You have various ones. We don't have to go through or into any sort of detail. Just know if there is a trend, it's motive, it's a reason. And if it's correcting, it's people just taking profits inside of that trend. How long the trends lasts and how long the corrective wave lasts, that is just something nobody's going to know. But I'm trying to get to the point that they're all looking just for a break up and a pullback. That's all they are looking for, no matter what. So that is done with the what. So what we are looking for, yeah? Let me just see quickly if you can type in the box there what it is that we are looking for. Yeah? Just to see if you awake still. So what are we looking for when we are trading this strategy and we are responsive traders? That's right. That's all we are looking for. Yeah, it's a break and a pullback. Nothing else. Nothing else but that. So the next part of the puzzle here is where. And this is the part that people is going to make a mistake on. Yeah, this is the part where they lose their money, because unfortunately the breaks and the pullbacks really appears everywhere on the charts. If you look at your charts now, every single move is a break and a pullback. Why? It's because when it's breaking, it's moving up, like in this case here, it's going up. That's an impulse wave. It's motive. It has a reason. It's gone in here to get up to the end here. When it's motive, that's your break, and then your correction is your pullback. Yeah, Elliot says this is a correction. Usually it has a 3-wave correction coming down here. Usually the typical move of the market is a 5-wave move up. So inside this impulse wave here, inside this, there's 5 smaller waves going and moving up towards this area. And also they have its corrections. And then you have your correction, and then that's your break and your pullback. Yeah. Sometimes you're going to pull your trigger at a certain fib level. But the way we are finding this is the most important. And this is why all the previous knowledge you've gained throughout the ages, a lot of you have good trading knowledge. You've got screen time behind your name and under your belt. So none of it has been a waste of time. Yeah, it's all been a useful thing. Because you now know where other traders are looking. If you have some knowledge of Fibonacci, then good. Don't throw that away. Yeah, you use that. If you have some knowledge of moving averages, the moving averages has crossed over, you know that a lot of people are looking at buying or at selling. It doesn't mean you need to do that right now, but having that knowledge is important. So none of it was a waste of time. You're using it to build your strategy now. So where do we look for these things? We're looking for it at trend lines, or wherever else other people finds important. We're looking at levels and on structure or on patterns. So if you are a pattern trader, or you remember your pattern trades of the past and gave up on that patterns because you saw it's not working, that knowledge is still powerful. As long as we can have two touches here and extend that line, whenever prices comes back here, then it becomes a level of interest for us. So you need confirmation that you have some sort of a level, and that confirmation is at least two touches. And then when it extends, when it comes back, this is where you are looking for the 1, 2, 3 and the break and the pullback. This is an example here of a double top. We have prices not being able to make higher highs. And if you extend this line and prices comes up, it touches there, you have a triple top. You are looking for your 1, 2, 3, your break pullback in this area. If you are a Fibonacci trader and prices goes up and it only gets to 78.6 here, you only get a 78.6 here on this pullback, then you are looking here for your break pullback to go short, calling it a failure to follow through. If it touches the line here, then you are looking for a triple top and also looking to sell. But in this area, this is where you are now looking for your break and your pullback to go short. But you need 1, 2, the touches, extension of the line, then. You don't do it here because you do not know. You don't know anything here yet. What you do have here and what is confirmed here is that there is some sort of a trend. So you do have 1, 2 there and an extension. So when it comes here, you are looking for something. But at this moment here, when prices hasn't gone up here yet, you don't have anything yet. It has to get there, yeah? Now I start looking here at 78.6 and I call it a failure to follow through. I'm starting to look there with my target here because this is the trend line. Only if it breaks this trend line am I interested in further shorting there. Yeah, just rewatch this video and that particular part, yeah? Now, what's important here is the extremes and the angle changes that we notice here. If we have a trend here, it's coming down, we can point this 1 to the extension. So now we know this is an area to look at and that's an area to look at. Now, again, the quality is important. Because we can see this is a trend coming down and here the trend has now suddenly changed. This year, looking for your 1, 2, 3 or break pullbacks here would mean lowering your risk. This is your second best. You only pull the trigger on maximum risk if you get to the extreme of the line here. Yeah. So angle changes of a downtrend, any pullbacks in between that are taken on lower risk. You need to find your 1, 2 points, extend the line, and then these here are your profit points to really pull the trigger. Now, if you waste your time and money and effort here, you are utilizing your account unnecessarily. Because if you take this trade and this trade and this trade, you don't have enough leverage to now take the proper trade that you are actually waiting for. There isn't anything wrong in doing this, but it's a lower risk trade. Yeah, the extremes are what we are looking for. Now, again, all your previous knowledge is not forgotten here. This is known as a bullish pennant pattern. Some people call it a triangle. Whatever it is, just know that it's there, that it's a thing. Nobody's going to refute that these patterns happens. We're going to utilize that knowledge now. If prices are going up, it creates a point, comes down, that's a point, it goes up again, that's a point. Once you have 2 points, draw the line. And then trade when it is hitting the line again. That's your extreme. This here is not the extreme. You don't have any pattern here. There is nothing that you have here. It creates your 1, 2, 3. But it's not at the extreme. So if you are trading these here, you are trading it with a minimum risk. But when you get here, this is where you're trading maximum. But don't take that just in that out of context, because you've drawn another line here and here now, and you've extended that. So you have a barrier. You have this top section and you have the bottom section. So pulling the trigger short here, which you should, after seeing a setup, you can see that this is your target here. And if you have less than like 20 pips there, then this again becomes a lower risk trade. So if you have 3 thresholds, risk 1, your highest risk is 2%, and your minimum risk is 0.5%, then this is going to be 0.5% now, because you don't have enough room to move. That's your target. Yeah. So you are looking at selling here. You're not looking at buying here yet, because you only have 0.1 and 2. The extension, there is where you're looking to buy. This is where you're looking for your break pullback to the long side, with your target being this now. And if there is more than like 40 pips here, then this becomes a good trade. The quality is good. So this could be your maximum level. It's immediately after your second touch. It looks good. It's on your level, and you have enough room to go, so you can use it as maximum. Here you're looking to sell, there you're looking to buy, but that's your target. So be wary on your risk when you're taking this one. When it breaks out, dropping down to the lower time frame, looking for 1, 2, 3's break pullbacks here to the long side is perfect. Maximum risk, because it's now broken out and you've got enough room to move. You're not barriered closed here with these. So that is all with the bullish pennant pattern. Now you have bearish pennant patterns where you do the same thing throughout the chart. Now, when I talk about the pattern shape here, it's best to look at it on the higher time frame. This introduction is it's just going to go through the basis of it. Yeah. On our next section, we're going to be looking at how to physically do this, or on which time frames and all of that is the best. For now, I just need you to realize that the patterns or the Fibonacci pullbacks are areas on the charts where you need to be looking for. Yeah. Here, you're not looking for anything. There you're not either. There you are not. There you're not, because that's only point 1 and 2. And unfortunately, here you're looking to buy because it's retouched your level here. And there you're looking to sell. There you're looking to buy. So on these levels, you're looking to buy or to sell, because in actual fact, you're looking to either enter the pattern again or to break out. It's either going to do one of the two things. It's either going to break out or it's going to rejoin the pattern. What helps us here is that if we don't see a setup getting us in long, then we are saved there. But if we see a setup to go long, we have to take that setup. In this case, prices falls all the way down. Forms another pennant. So we are looking to buy here, looking to sell there. Every time it hits the barriers, we are looking for either buys or sells inside these patterns. And there are a lot of patterns. Upward flags. After the second touch here, you're looking to sell. You're looking to sell. You're looking to buy and to sell. Here's another pattern here that they've missed. This here's another pattern. Downward flag. Here it breaks up nicely, a pullback. We're going to talk about the pullbacks and all that when we look at the Renko. Now I just need you to even go back to your charts and identify all of these patterns on the 4-hourly chart and on the 120 Renko. All of these patterns, identify them for me. A rising wedge, Elliot Wave will call this a leading diagonal. So you, after your second touch here, the confirmation that this is where the barrier is drawn, you're looking to buy and to sell here. Here you probably got a sell signal on the lower time frame. So look at these patterns on H4 and on the 120. Also look at it on the 240. Try and identify all these patterns. A falling wedge here, we have the confirmation here. It can't go higher up. Another confirmation, and here it's just going lower. So every time, now these, when it doesn't touch your extreme, then those are not any trades. Once it touches your extremes, then you are in. Even this one is not an extreme. Yeah, obviously you can try and draw it better, but based on the way this guy has drawn it here, that is not the extreme. That's the extreme there. And then here, these break pullbacks in between to get short here, but those are not the extremes. The extremes are when it touches these lines. Those are the extremes. Those are the profit points. That is where you need to look for the 1, 2, 3s and the break pullbacks. Not in between here. In between here is no man's land. It's nothing going on there. This is where we make our mistake. Trade only at the extreme. So there are many patterns that I want you to focus on. Anything that you know. It's mostly just triangles and flags and wedges and trends. It's nothing more. All these other names are just the same, you know. It's nothing. The thing that we need here is to connect point 1 and 2 and extend. Connect point 1 and 2 and extend. This is called structure. Yeah. All of these patterns are called structure. We're going to term this as structure breaks. And when you learn the strategy part, then the structure break is the important thing. Yeah. So on a chart here on the daily, I want to show you a few structures. Now, this is point 1. This is point 2. That there is point 3. You are looking to buy and to sell here because in case it breaks to the long side. Here, point 1 and 2, You draw your line, you've got structure. That's your upward flag. You have that structure. So at these points are the extremes. This is where you are looking at. You're not looking in between here. I'm going to mention again the M12, the M24, and your H4 is where I want you to find structure. And then post it in the Discord group. Now notice this point. You've identified structure. You've identified the extreme of the structure, which is here. And then it forms a nice wick. Prices comes up into structure. I've just zoomed in on this wick. This is the same daily chart. This is the diagonal line there for the flag. That is the wick. Now, as prices comes into the wick, this is my 15-minute, comes into the wick, comes to the point there. Just notice here, that is the point here that it's the highest that it's been on the daily. That is the point there, your 15-minute. Okay, it's in your profit point here. You are zoomed right in there. You've been looking at this since you've identified 1, 2, you've extended your line. You're looking at the extreme. Prices gets to your extreme here on the 15-minute. There, that is profit point. You need to look there now. You need to be sitting at the desk. You need to be concentrating only on the chart. You need to be breathing in through your bloody nose and out through your mouth. You need to shut out everything and everyone, because this here is the part that you've been waiting for, man. This is where you are looking to trade. You're not looking to trade anywhere else here. That, I'm sorry, you've missed it. You know, if that, you've missed it. This is where it is now. You've got it. And you want to either look for buys and sells. You can see there's nothing going on for a buy there. But what you do see is zoomed in structure. 1, 2. Extension. Break of your structure. What is this structure called here? This is a trend line structure. It's broken. This is how it looks on your Heikenhashi. Prices comes right up there. You've got your trend in your zone. It breaks down. Justin calls this a prominent break. Breaks down. Pullback number 1. And you are looking to try and sell that one. Another example here. This here is a wick. Yeah, it's come down on like a structure. This is the whole wick here. Zoomed in on the 15-minute. This is how it looks on Heikenhashi. This is the area. The wick is that big. And then again, because you are on a zone, because you are in an area, you are looking for a break and a pullback to go long. And you're looking for number 1 in an area of importance after its broken structure at an extreme level. Now, talking about levels here, I just did a live room today, and prices were at the 30 level, and I was hesitant to pull the trigger. And I am always hesitant to pull the trigger on zeros, on 30s, on 50s, and on 70s, especially when we are trading the euro dollar and the pound dollar. These are levels too. But if a trade happens at these areas, I am immediately, no matter how it looks, I am immediately trading with lower risk. I'm immediately trading at my lowest risk. If my entry happens on zero, if my entries happens on 30s or 50s or 70s, then I am lowering my risk. So far what we have is the what and the where. So what we are looking for is a break pullback, and you know that it needs to happen at a specific place. Right, so that, I think I'm going to end it there, and we'll start on the when part tomorrow. The when part has something new that I've been using, and I'll show you that tomorrow. Or I will contact you individually to find out what is the best time, or if this same time is going to be good for you as well. So do you have any questions on just that? Don't ask about the entries and that, because that is the how. Yeah, what you are looking for, where you are looking for it, you know that now. The issue that we will cover next is when to look for it, and then how to actually physically do this. And then at the end of the whole thing, then Mark is going to talk about the who, because the who is you. So any questions that you have here now based on just that stuff, please let me know. We've been joined now by Mr. Dalvin Parker and also by Mark. So any questions? The Discord group, everybody's going to be thrown into this Discord group now. You're already in that one, Justin. Everybody's going to be put into this Discord group now. Yeah. And also the end of this, Mark, yes, Dalvin, it's recorded, and it's going to be, you have access to the course already. You're the only one that has access to the course so far, Dalvin. But this is how it's going to be. Yeah, we're going to record these sessions. It's going to be bonus material there. And also the course is going to have the actual more rehearsed lesson that I'm giving you. Yeah. Now the homework that I want you to do is to identify any of those patterns that you have on the 4 hourly and on the 120 and the 240, and just post it in the Discord group, and you can name the patterns as well. Yeah, make sure that it's like more or less a live chart so that we can extend the line. You know, we're getting 0.1 and then we're getting 0.2. Let me just draw this quickly. Let's say you're getting a line up there, and prices goes up and it comes down and it goes back up again. So you have 0.1 and 2. Then I would just like to see when you extend the lines, that's 0.1 and 2, what's going to happen at point number 3, and what's going to happen at point number 3 there, and how long it stays in that section. Yeah, so just focus on what's happening there. So Justin has a question here. He said, at the third point, I don't quite understand. That point is not a break pullback on the higher time frame. So you only look after that, you look for the break pullback on the lower time frame break. Okay, the first step is, you know what it is to look for, and that break pullback is on the minute scale, it's going to be on your M3. So you're looking for the break pullback on M3, on your 1 minute, on your 5 minute. You're not looking for the break pullbacks on these higher time frames. The higher time frames like the H4 and the M24 and the M12, that is what I'm looking for, is structure. Draw patterns on these H4s, M12s. That is your extremes. Yeah, that's your extremes. The points here, there, that's your extreme. Yeah. So what I'm looking for is, firstly, is on these higher time frames to draw the extremes, because that is the where. The what is on M3 and on lower time frames. Yeah. And Mark, when do you think you are going to be able to do the psychology part? I'm thinking that tomorrow would be another session, and then we can either do it tomorrow, or we can do it on the next day. So the plan here is that tomorrow we complete this, and on the next day we practice looking at live charts and trying to find live trades when there is a lot of volatility in the market. So how does that sound? Okay, good stuff. Yeah, so that was it for today. Tomorrow we will cover the when and the how, and the last section is the who, and that's Mark's section, and then we will do the live trading. Yeah, so that's how we will go ahead here, and the session is recorded. Everyone is going to get this link to the Discord now. Justin, you're already in there. Yeah, so I will speak to you in the Discord group. So thanks a lot for joining, and just do that homework. Yeah, H4, M24, M12, just dump a whole lot of charts and draw your pattern and structure. Yeah, like this here. That's all that we want. We want to make you try and identify the where, and the where is at the extremes. Okay, guys. Bye-bye.